With Silver Investing News, and here today with me at the Canadian Investor Conference is Ed Steer of KC Research and GATA. Thank you for joining me today.
Well, thank you for having me on, Charlotte.
Great. So my first question for you is, the first 6 months of the year just come to an end. How did silver perform, and were there any surprises for you?
Well, silver performed well at the beginning of the year, and then it sort of got sold down to the level where it is today, where we're at new lows for this move down. I would say I'm more disappointed in the silver price action rather than surprised by it. And the reason for that is that the banks of the world don't want the prices of precious metals going too high, because that's an alternative asset. They want people to stay in the stock market, they want them to stay in the bond market, in paper assets rather than hard assets. So when the price got a little too frisky, JP Morgan and the other small group of commercial traders on the COMEX came along and beat the price back down in not just silver and gold, but also platinum and palladium as well, and that's where we are today.
Okay. And what needs to happen for silver prices to move higher?
Well, that's an easy one. I answered that question yesterday, and I'll answer it the same way again today. It has to do with the fact of what JP Morgan, which is the largest silver short on planet Earth on the commodity exchange, on the COMEX, they're sitting right now with a short position, I don't know, around 18,000 COMEX contracts. And when they decide they want the price to move higher, it'll be up to them to decide, because they're the tallest hog at the trough right now.
Okay, all right. So recently, the London Silver Market Fixing said it's going to stop administering the London Silver Fix midway through August. And I haven't heard very much about what that will mean for the market. So could you give some insight?
Well, the silver fix, like the gold fix, goes back a long time, and the fact that it's coming to an end, I'm not surprised by it. As a matter of fact, it's long overdue. And the silver fix itself is not the problem. I'm sure lots of people are talking about the silver fix being manipulated or the gold fix being manipulated, and that's absolutely true. But the problem lies elsewhere. It's the entire commodity exchange and the trading organization that's backed by the CME group. The trading itself throughout the entire trading day, whether it be morning, noon, night, whether it be in China or whether it be in London, it's the entire trading pattern where the banks, principally JP Morgan Chase and 3 or 4 other banks, are allowed to zoom the markets up and down at will, and the rules of the commodity exchange are very clear on this, but they just don't enforce it. So what will it take for prices to rise? It will be for the bullion banks to decide that higher prices are necessary to stoke inflation or to get the price back up again. But whatever the price is going to be in the future, it's not going to be a free market price. It'll be something dictated by JP Morgan and the other banks.
Great, okay. All right, so finally, do you have any ideas about what might replace the silver fix?
Well, I'm kind of hoping it'll be none of the above. And the reason I say that is very simple. There's no fix for oats or wheat or rubber or cocoa or any other of the commodities that are traded on the COMEX. It's only the gold and silver fix and the gold and silver prices. And if the other commodities can live without it, so can gold and silver. And as far as I'm concerned, if it goes the way of the dodo bird, we'll all be better off. But like I said, the problem just doesn't lie with the fix. It lies everywhere in the COMEX trading system.
Okay, well, that's all for me today. Thank you so much for joining me.
Charlotte, thank you very much for having me.
Okay.